Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Trump's tariff wall hits the BRICS as the US president adds an additional 10% levy on any country aligned with the emerging market group. China ramps up trade tensions with the EU as it targets medical device imports. Oil extends its slide after a larger than expected production hike from OPEC Plus raises concerns of oversupply. Plus, President Trump slams Elon Musk's plan for a rival political party, sparking concern among some investors that Tesla could face more blowback. So there is a sense of caution in these markets as we lead up to that July the 9th deadline, of course. Mixed messages on the trade front coming through from the Trump administration. We will unpack that story for you, of course, throughout the show. European futures currently flat on the Stocks 50 futures. Here in the UK, FTSE 100 futures pointing down by 20 points so far at 8,816. S&P E-minis, the US, of course, returning after that national holiday on Friday, currently pointing low by 0.4%. NASDAQ 100 also softer by 117 points. We'll look at the Tesla weight on the NASDAQ 100 on concerns about that car maker, on the politics of the US and Elon Musk. Let's flip the board and have a look cross-asset then. You're seeing upside for treasuries, upside for the dollar as well in the session today. Arguably, that's where the focus is right now in terms of movements around these asset classes. 432 right now on the benchmark US 10-year, just a move lower of 2 basis points. The pound at 136, a little softer on the pound, on dollar strength down 0.2% in the session today. Eyes as well on the oil price, given the decision by OPEC Plus to come out with more supply than the markets had expected. That will hit the markets in August. 67.97 right now, just below $68 a barrel on Brent. You're seeing softness in WTI as well. And gold also weaker by 0.9% on the tariff uncertainty, $3,308 per troy ounce when it comes to the yellow metal. Let's cross over to Asia right now, where trade is top of the agenda there as well. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing Asia stocks sliding by the most in 2 weeks, dragged by the likes of TSMC, Samsung Electronics. They're not convinced, these investors, that the August 1st deadline is a sort of extension that materially changes things, given how there's still a lack of clarity on Trump's tariff policy path. So trade, as you say, is really front and center. And I think just to highlight as well the investor concerns, some things this actually adds to concerns, because you think about the Japanese corporate earnings season that comes up around August 1st, the next one coming up, that could actually run into the deadline. So we're actually seeing in the Japanese topics, for example, how the underperformers are the Japanese banks today. There's a disconnect, even against the backdrop of elevated rising yields in the country. Now, flip the board also, we have the retaliatory efforts from Beijing to the EU's curbs on medical device makers. So today we're seeing double-digit, almost 20% climbs on some of these Chinese mainland shares. Obviously, this is adding to tensions between these key trading partners, China and the EU, at a time when Beijing has been seeking to shore up relations elsewhere, given very fraught relations with Washington. Now flip the board again and take a look at what we're seeing in Asia currencies as well. You're seeing that filter through from Trump's Truth Social post about how there could be additional tariffs for countries that are seeking to align themselves with BRICS. And certainly that's that reaction you see on the Asia Dollar Index, which tracks Asia currencies, excluding the Japanese yen. That being said, even though we're seeing the renminbi coming under pressure, keep in mind that this is coming against the backdrop of the PBOC's continued signals for wanting to guide the renminbi stronger on that stable path. So this knee-jerk reaction you're seeing also in dollar China might not last, so say some of our strategists. Tom?
OK, Avril Hong in Singapore with a check on the Asian markets and an excellent breakdown. Avril, thank you. Now, nations are, of course, scrambling, as Avril said, to secure those trade agreements with Washington or lobby for extra time ahead of Wednesday's deadline. President Trump says he will send out letters about tariff plans starting later today.
We'll be sending letters out on Monday having to do with the trade deals. It could be 12, maybe 15. You know, Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
OK, for more, let's bring in Bloomberg's news desk editor, Jill Desis. Jill, any countries then that you and the team are looking out for in terms of proximity to a deal? Who is next? Who is closest to getting a deal across the line then, and who is not at this stage?
Well, Tom, it's a bit difficult to ultimately tell, just because I think, as you've heard from Trump there, a lot of this kind of feels like it's shifting a bit. I mean, just at the end of last week, we were hearing that these letters would go out on Friday. We still don't really know exactly, what would be in them. How much of that is basically just the U.S. once again saying, here's your tariff rate, we're done here, versus what's going to be, actually a process of negotiation. I think what you're seeing on screen right now is just the way that we're looking at several, particularly in Asia. I think India is really interesting to watch. We're thinking that there might be something coming there fairly soon. They've certainly been working pretty aggressively to get a deal. Korea, I think, is really worried about those auto tariffs. I'm not sure how much that's really going to factor into any agreement they might come up with. I think it's a pretty similar story in Japan, where I find it more difficult to believe that we might actually get something soon, just because those sectoral tariffs on autos, that's really something that's a sticking point. That 25% tariff, that's something that's a sticking point. Trump has kind of indicated that he may not necessarily want to get rid of that. And from the Japanese perspective especially, I think they're really worried about the impact that may have on automakers. The Prime Minister Ishiba has certainly said, that they're prepared for any kind of scenario when it comes to tariff. And then, we've also heard from Thailand and Cambodia actually just recently said they think they've reached a deal with the U.S., but we don't really have any further details on what exactly that looks like. So I think a lot up in the air as we head toward July 9th, and then I think we'll have to see whether there's anything negotiated after that, sort of older deadline really passes here.
Yeah, and to your point, Jill, it seems the time frame has been adjusting somewhat. The US Treasury Secretary Scott Bessent coming out over the weekend, hinting that maybe August the 1st is another deadline for these trade negotiations. Is that how we should be thinking about it? Do we have any clarity in terms of the time frame as to when these nations, when these countries, these trading partners have to come to an agreement?
Yeah, I think, the Trump administration is really still trying to hold to this idea that, July 9th, that was the 90-day deadline here. But I think the rub is that it's that August 1st is when they've said these new tariffs would go into effect. And so there is kind of that implication there that even if something isn't agreed necessarily by July 9th, maybe there will be additional negotiating room, in the weeks leading up to the actual effective date on August 1st. That being said, I mean, you've got, Trump on Liberation Day basically just came out with this poster saying, here's what your rates are. I wouldn't really, hold anything firm until we actually get past that deadline and see how things are actually being negotiated. Again, I think this letters thing that Trump came out with at the end of last week kind of throws a wrinkle into it. So, there's still that expectation of, okay, how much of this is actually going to be down to a deal versus how much of this is going to be the Trump administration basically just coming out and saying, well, this is what we're imposing because we can't actually reach a deal with you.
Yeah, and the news line's coming through, which is this threat from President Trump of 10%, additional 10% tariffs on BRICS nations, or at least BRICS countries that align themselves with the BRICS nations. Is it? You talk about wrinkles and maybe flies in the ointment. Is this another potential stumbling block for negotiations when we think about countries, particularly like India?
Yeah, Tom, I'm glad that you pointed out India there, because that's really, I think, the BRICS nation that I'm looking out for most. I mean, China, obviously, U.S. has its own, sort of avenues for dealing with trade there. Russia, I don't think is really a factor in these, latest trade negotiations. But when it comes to, Trump's comments, I think what's really interesting is we're not quite sure how exactly this would factor in yet. He's accused BRICS nations of having anti-American policies, but he didn't really go into into a lot of detail. I will say, though, Tom, that what we had heard from the president earlier was that he was threatening, at one point to impose 100% tariffs on, BRICS nations if they were to stop using the U.S. dollar in bilateral trade. A lot of conversations about BRICS nations and, how they want to treat local currencies versus the U.S. dollars. I'm not sure if that's something that's factoring in to Trump's thinking here or if it's anything else that BRICS nations have been discussing at their summit in Brazil this weekend. But yes, I do think that particularly when it comes to India, which we know is trying very aggressively to try to negotiate something with the United States when it comes to a trade agreement, that's going to be a really, really big one to watch. And if this, additional 10% tariff threat kind of factors into any of those talks that the U.S. is having with India.
OK, Bloomberg's geodesic on the complexities of these trade negotiations. Thank you for getting us up to speed on what to watch for and recent developments, of course, as we count down to that July the 9th deadline. Meanwhile, as we mentioned, US Treasury Secretary Scott Bessent has hinted that some countries lacking a trade agreement by Wednesday will have the option of a 3-week extension to negotiate. He spoke yesterday on CNN's State of the Union.
We're going to be very busy over the next 72 hours. President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
OK, let's bring in Bloomberg's Valerie Teitel now, who is, of course, keeping a close eye on the market reaction. What is the market adjustment, then, to the headlines over the last 24 hours ago or so on trade as we count down to this deadline?
Look, I thought it was really interesting that we had both Commerce Secretary Howard Lutnick and then Scott Bessent talking about this August 1st date, that these tariffs that might or might not get sent out in letters won't go into effect until August 1st. Is the market interpreting that as an extension of the deadline? It's really hard to tell, Tom. I've got a chart behind me here of S&P 500 futures over the last 3 or so sessions. You can see that when we opened up in the Asia session, there was a boost to these U.S. futures, but it was minimal. You can compare it to the boost that was given after the strong payroll report on Thursday and those record highs that we reached. We're still off those record highs, and we're still in the red in the last 2 sessions. So it's really hard to maybe parse how the market is interpreting this. We are seeing a slight boost to the U.S. dollar. We know that the Bloomberg Dollar Spot Index has been reacting positively to positive news on trade. We're up 0.2% from the open in Asia. So maybe a hint there that the market is taking these latest comments as good news, but there are still jitters ahead of the deadline this week. And we might have a new deadline to contend with the Truth Social post out from Donald Trump talking about these letters sent at 12 noon Eastern time. That's after the close London, around 5 p.m. London time. But maybe a new risk event on the horizon for today.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. And trade does seem to be the factor that will dominate, of course, the markets this week. Here's what else to be thinking about then beyond today. On Tuesday, President Macron of France, of course, will be visiting the UK for a state visit. So we'll be watching that and bring you, of course, all the live reaction to that development. And on Wednesday, it is that tariff deadline. That is the day, July the 9th. And, of course, we know that nations are counting down and rushing to try and formalise at least framework deals before that deadline. And on Wednesday, FOMC minutes giving us more details in terms of thinking of the Federal Reserve as they weigh up the tariff impacts on prices and inflation. You can get a roundup of the stories you need to know, of course, to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go, and the focus, of course, on that Daybreak page today is on the trade negotiations. Coming up, OPEC Plus surprises the markets with a bigger than expected crude production hike. We're going to talk oil next. Plus, later in the show, I'm going to be joined by Jonathan Ross, the CEO of AI inference platform Groq, to discuss its plans to expand into Europe. It's all coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Oil falling this morning after OPEC Plus agreed to boost production by more than 500,000 barrels per day in August. The bigger than expected hike then has surprised markets and raised concerns of a glut, just as US tariffs spark worries about the demand outlook. For more, we're joined by Bloomberg's Horizons anchor Jemana Pasechi, who I'm very pleased to say joins us around the desk this morning. Welcome to London, Jemana. I know you've been here for a few days in person, so what a pleasure. And an important news story, of course, around the energy space and the surprise coming through from OPEC Plus. Talk to us about the decision-making and what we know about the numbers for August.
Yeah, certainly not the first time they've surprised in the last few months. But I've got to say, the meeting itself only lasted 10 minutes, and it was unanimous. Very quick meeting, very swift resolution. They announced Saturday morning that they're going to be bringing back, and this is, by the way, the group of 8 of OPEC Plus, so specifically the voluntary cutters, as they're known, have announced that they're going to bring back 548,000 barrels per day to the market as of August, but also some signals that they may actually announce a similar amount at the upcoming meeting in August for September, which means by September, they will have actually completed putting back the 2.2 million barrels per day cuts that they introduced back in 2023, 1 year sooner than expected, i.e. everything the OPEC Plus have announced this year so far has indicated that they've been wanting to bring back extra barrels to the market much sooner than they had originally penciled in. And their feeling is, and this is where the justification comes in, the market can handle it. And you see the reaction this morning. Brent is down a little bit, but only down, I would say, about 0.4%, 0.5%, perhaps less than what people would thought the reaction would be. The group citing a steady global economic outlook, healthy market fundamentals, including low inventories. And of course, that is something key to watch, and we can talk about that, perhaps some drivers in the coming months. But then also what is important here, Tom, is clearly they're looking to regain market share, specifically the likes of Saudi Arabia that have been sitting on so much spare capacity, UAE as well, looking to gain back some of the market share that was lost over the last couple of years, especially as non-OPEC supply has increased so much. And then also, this is something that they wouldn't say directly, but I think it would keep the man in the White House pretty happy as well, because he's talked about the desire to keep oil prices low. And here they are, keeping oil prices in a place, in a proximity that I think President Trump seems to be comfortable with, but at the same time, not causing so much disruption to the market that, oil prices are tumbling to below 60, and at the same time managing to gain back market shares. So for OPEC Plus, they felt the timing was right to continue to bring back these extra barrels to the market.
And prices at this level seem like a bit of a sweet spot for OPEC Plus, or at least most members. Is this a market that is oversupplied? There are those concerns.
Yeah.
And what are you going to be watching for in the weeks and months ahead?
Yeah, I wouldn't say it's necessarily a sweet spot per se, because you do have the likes of Saudi Arabia having to perhaps rethink some of their fiscal priorities. I mean, everyone knows that the fiscal break-even is somewhat closer to $90. That doesn't mean that they can't sustain lower oil prices. It just means that in order to sustain the amount of spending, they will have to borrow more in the market, which is what Saudi Arabia have been doing, or cut back on spending, which is also what they've been doing. They've been reprioritizing. But in terms of the drivers, look, low inventories, I think, is something key to watch, because once those inventories and those stockpiles start building up, that's a signal that perhaps a supply glut is to come. And the expectation from most market experts is that once this summer season is out of the way, you get the seasonal demand because of high electricity use in the Gulf region, because of the air conditioning units, transport, fuel in the West. Once those seasonal demands drivers are out of the way, then perhaps you could start to see a bit of a drop-off in demand alongside a build-up in inventories. And at the same time, we talk about OPEC continuing to put barrels back to the market. U.S. oil production, all-time high. Even Iran, and this is a country under maximum pressure that we've been discussing, also bringing, the most record amount of oil to market in the last 4 decades. So there is plenty of supply hitting the market, which is why some key analysts out there, JP Morgan, Goldman Sachs, is saying that they still see Brent sort of hitting around the low 60s range by the end of this year, because supply is growing at multiple speeds of demand. And I think that's something to watch out for.
OK, possibly low 60s as we look at $68 a barrel right now on Brent. As you say, just down 0.4%. The loss is a little bit more pronounced on WTI with a drop of 1%. So we watch the inventories as well. Jemana Pasechi, thank you very much indeed for breaking down that decision, which took, of course, markets by something of surprise. OPEC Plus, of course, with that decision to add more barrels coming August, of course. Now some other stories Making the news this Monday, Iran's supreme leader, Ayatollah Ali Khamenei, has appeared publicly for the first time since the 12-day war with Israel began last month. This, according to Iranian state media, after weeks sheltering in a bunker. The New York Times reports that Khamenei attended an annual Shia religious ceremony held at his compound. Khamenei didn't address the crowd, which appeared surprised by his appearance. And rescuers in Texas are still searching for at least 10 children and a camp counselor who are missing after catastrophic flash flooding. At least 70 people have died, including many children attending youth camps over the holiday weekend. Officials are struggling to explain whether they did enough to warn people of the fast-rising waters. It's feared the casualty count will climb with more heavy rain forecast in the coming days. And President Trump says the US will discuss a TikTok agreement with China on Monday or Tuesday, and that Washington and Beijing, quote, pretty much have a deal. Tech publication The Information has also reported that TikTok is building a new version of its app for US users ahead of a planned sale to a group of investors. The company reportedly plans to launch the app in US stores in September. Coming up, the race to ramp up lithium-ion battery production. We're going to take a look at which countries have managed to build sustainable supply chains. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Batteries are at the heart, of course, of the energy transition and the political battles over energy security as the world shifts away from fossil fuels. BloombergNEF has been digging into the state of battery supply chains around the world and ranking them on how secure, reliable and sustainable they are. With me now is BloombergNEF metals analyst Gomes-Callus. Let's start with the ranking then, because you've been watching. You and the team have been monitoring and putting a ranking out for 5 years. Where do things stand right now? What's changed in terms of the ranking?
So in four of the 5 past editions of the ranking, we've seen China take the top spot, and that is because it's so dominant in terms of its raw materials and manufacturing in the context of batteries. But it's also the biggest demand centre in the world. But what we saw in this edition was that China replaced Canada at the top spot for the fourth time, and that was for 3 reasons. The first being it's continued to invest and improve in its physical infrastructure to support its supply chains. The second is because China now has the cheapest commercial electricity prices in the ranking, and third, because China's well-established supply chains are able to better weather some of the difficult industry conditions that we've seen recently compared to emerging supply chains.
OK, so China is playing something of a dominant role in this segment. What about the US then, and what the opportunity is stateside right now?
The opportunity is big and it's quite unique because actually what we see in the ranking is typically countries within the same region seem to have similar supply chain strengths and weaknesses. But in North America, that's not the case. So if we take a look at Canada, it's a raw materials powerhouse, but its capabilities in manufacturing are lagging. But if we look to the US, for example, the US is the 3rd largest battery cell manufacturer in the ranking, but its raw materials sector isn't as progressed. So if the US and Canada actually partnered to fill some of their supply chain gaps, it can maximise their potential more than if they were to do it alone. But in this current political climate, we're seeing that's becoming more and more unlikely.
Yeah, indeed. The politics is suggesting that, in fact, on trade, Canada and the US are moving further apart rather than closer, and particularly when it comes to the renewable energy sector. As you look ahead to next year, then, and the ranking for next year, how do Trump's policies that defang some of the Inflation Reduction Act, how is that going to impact this space?
Well, put it simply, the Trump administration is going to have a negative impact on battery supply chains in the US. And what we've seen this edition is actually the incentives of the Inflation Reduction Act were so pivotal in helping push the US to joint second position with Canada. But this new Big Beautiful Bill is going to reverse a number of the incentives in the IRA. So it will roll back some of the process that we've seen in manufacturing and demand by phasing out some of the EV-related tax credits.
OK. Ellie, thank you very much indeed. Smart analysis, really important space to keep watching as well. Ellie Gomes-Callus, BloombergNEF metals analyst. Plenty more coming up. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Trump's tariff wall hits the BRICS as the US president adds an additional 10% levy on any country aligned with the emerging market group. China ramps up trade tensions with the EU as it targets medical device imports. Oil extends its slide after a larger than expected production hike from OPEC Plus raises concerns of oversupply. Plus, President Trump slams Elon Musk's plan for a rival political party, sparking concern among some investors that Tesla could face more blowback. Checking in on the markets, and there's a cautionary tale, at least, rippling through the equity markets as we count down to the July the 9th deadline. Is July the 9th the deadline, or is it August the 1st? Slightly mixed messages from the Trump administration over the last 24 hours or so. European futures just pointing modestly higher by 0.1%, with the context, of course, that European stocks fell last week. A week of losses for European stocks, currently pointing higher by 0.1%. FTSE 100 futures down by 13 points. S&P E-minis reopening, of course, after the national holiday and pointing lower by 0.4%. Nasdaq 100 futures also pointing lower by around 0.5, looking to drop 125 points. Let's flip the board because the money is moving into the dollar and it's moving into treasuries in the session so far. 432 right now, 432 on the benchmark US 10-year, with yields down close to 2 basis points. The pound under pressure on dollar strength, down 0.3% at 136. Brent, of course, a little softer on that OPEC Plus surprise decision around adding more barrels to the market, down 0.4%. And gold, interestingly, also a little softer amid these trade tensions, down 0.8%. So the US president has threatened an additional 10% tariff on countries aligning themselves with what he described as the anti-American policies of BRICS. Donald Trump has previously threatened 100% tariffs on the BRICS nations if they stop using the dollar for bilateral trade. Brazil is currently hosting a 2-day BRICS summit, with the Russian President Vladimir Putin attending remotely and the Chinese president sending his premier, Li Qiang. Let's get more from our chief North Asia correspondent, Stephen Engel. Steve, why has Donald Trump then lashed out at the BRICS countries in this manner? What are the potential implications?
Yeah, well, he feels he has leverage right now with the U.S. economy and the stock market doing well. He just passed the big, beautiful bill, and he is also sort of, through Scott Bessent, showing a little bit of leniency on that July 9th deadline for the return, potentially, of those very high reciprocal tariffs, possibly, as you rightfully said, Tom, to August 1st, to give a little bit more wiggle room, 3 more weeks to get a number of different deals done. But when the BRICS members, which is not just Brazil, Russia, India, China, and South Africa. It also includes new members Indonesia, Ethiopia, UAE, Iran, and Egypt as relatively new members. He sees anti-American policies coming out of that summit in Rio, like a potential condemnation of what they perceive to be unilateral trade policies coming from the White House. And also they condemned in a joint statement the war against Iran, or the military attacks on Iran. So Donald Trump took to his Truth Social media platform and essentially said, hey, if you're going to, warning to essentially emerging markets, if you join in these kind of policies with the BRIC nations, then you're going to get an extra 10%, and it's not going to be negotiable.
Meanwhile, Steve, and this, of course, is a dynamic you have followed very closely for a number of the years, the relations between China and the EU, there had been a narrative that maybe there would be proximity, or at least a closing of relations between the two sides as a result of Trump's trade. Well, that is not happening. It seems that the relations are actually deteriorating.
Yeah, it's a weird triangle, isn't it? Because obviously China would like to get better relations with the EU at a time when they are having their trade and geopolitical disputes with the United States, and while the United States is having trade disputes with the EU. We had Wang Yi, the foreign minister, the most senior diplomat in the Chinese government, go to Europe for the past week, as you rightfully know, and he probably came back a little bit disappointed because the rhetoric coming out of Europe on a number of different fronts has not been to China's liking. In fact, on July 24th and 25th was supposed to be a 2-day EU-China summit. China has reportedly cut that in half. They're not pleased And again, as you see the top headline right there, China is going to reciprocate on the basically blocking of EU companies that are based in the European Union, not their divisions based in China. That's an important caveat. But they're going to basically ban them from the medical device procurement of the Chinese government in retaliation for what the EU did as well for Chinese medical device makers, which, by the way, exports of those Chinese medical devices to the EU doubling, more than doubling from 2015 to 2023. So a little bit of protectionism going on both sides.
Yeah, indeed. And that scale, that size and scale is important as well to think about as you underscore for us. Bloomberg's chief North Asia correspondent, Stephen Engels. Steve, thank you so much for breaking that down for us. To broader geopolitics right now, because Israel has sent a team of negotiators to Qatar for talks with Hamas on a ceasefire in Gaza, potential ceasefire, of course. It coincides with a trip to Washington by the Israeli Prime Minister Benjamin Netanyahu to meet the US president. Let's get more from our Israel bureau chief, Ethan Bronner. Ethan, what do we expect from Netanyahu's meeting with Donald Trump?
Morning, Tom. I think that we're expecting a lot, but we're also quite aware that it is there are a lot of problems here. That is to say, Israel is certain that Hamas is so pushed back on its back heels that it's going to yield and give in to Israel's demands. It's not at all clear to me that that is the case. So the talk of a deal, I think, could get difficult if Hamas doesn't agree to all the things that Israel's insisting on, which is basically complete defeat of Hamas. Netanyahu and Trump are meeting for dinner this evening, and then the prime minister has a series of meetings all week long in Washington. And we'll see. I mean, a lot of things can happen. And as you said, there is a group, a team of negotiators in Doha, in the Qatari capital, also in indirect negotiations with Hamas. So we'll see. It's a very key week. But I'm not certain that we're going to get an answer this week, to be honest.
OK, so that's what to watch for and what may come about, what may be some of the sticking points. Meanwhile, we get a reminder, of course, that the conflict between Israel and Hamas has those wider ramifications with a flare-up in terms of Houthi attacks. It seems Yemen, again in focus over the weekend. What's the latest on that front?
Yes, Israel sent 20 fighter jets overnight to Hodeidah, to Yemen, and dropped about 50 payloads. They said these were all Houthi sites, and the Houthis shot, I think, a couple of missiles this morning and overnight at Israel as well. So that's one of the proxies of Iran that continues to come after Israel. Hamas, Hezbollah, and those in Syria and Iraq have been more neutered. You know, that sort of range of ability of Iran to reach beyond its borders and to go after Israel continues to some extent.
OK, Bloomberg's Israel bureau chief, Ethan Bronner, thank you for that update and what to watch for in terms of the meeting, of course, between the Israeli Prime Minister and President Trump later today. Coming up, AI startup Groq announces it is expanding into Europe. We're going to get the details from founder and CEO Jonathan Ross. That is coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the AI startup Groq has just announced that it is expanding into Europe with plans for a data center footprint in the Finnish capital, Helsinki, of course. Groq competes in the AI inference space, where models, of course, use their training to make decisions and predictions. The founder and CEO, Jonathan Ross, is with me now. Jonathan, thank you very much for joining us in the studio. Formerly, of course, a very senior engineer at Google and competing now against NVIDIA when it comes to inference. And so this is the significance of this investment that you're making in Finland as the demand around AI seems to be strong still. What does it tell us about that demand picture? How significant is this for you and the team at Groq in terms of the European picture for demand for inference?
So almost about a third of the developers who've swiped a credit card with Groq are actually in Europe. And right now, most AI companies can't get enough compute. in the U.S., it doesn't matter where they are. They're going to different cloud providers to try and cobble together enough compute in order to meet their needs. Since we have so much demand in Europe, we decided to do our next deployment here. We decided that a little over a month ago, and we are currently setting up racks in our new Helsinki data center, and we'll be serving traffic by the end of the week.
And the size and scale of this data center, just give us some kind of context in terms of how we should be thinking about this.
It'll be very close, about 80% of the size of the deployment we did in Saudi Arabia, which was about 19,000 chips.
And the kind of costs that we might be thinking of, you're partnering with Equinix on this. What kind of costs should we be thinking about, ballpark figure, in terms of how much you're investing and spending on this data center?
Yeah, so it should be similar. And then in terms of what we charge for the tokens which come out of it, it's actually less than most of what the market charges.
You have carved out this niche in terms of cost, in terms of efficiency, and in terms of the gains around inference. And you're taking market share from NVIDIA on that front, which does both the training, of course, chips for training, but also the inference piece. How is that competition shaping up? What kind of market share do you expect to be taking from NVIDIA over the longer term? What are your ambitions? What is the current trend now telling you about the prospects into the future?
Well, I don't think we're taking market share from NVIDIA, and I don't think we have to. I think we're creating a larger market. So we're probably one of the best things that's ever happened to NVIDIA shareholders. When you buy a GPU, there's a very high margin on that GPU, and that's fine when you're using it for something called training, which is where you're creating the AI models. You then get to amortize that model that you created across all of the uses. So it doesn't matter if it's very expensive. For inference, it's very different. Inference is when you actually use the models, sort of like when you plug a device into an electric socket and you get electricity to run the device. That's like inference for AI, when you try and use the model. That is very high volume, low margin. And if NVIDIA tried to go after that, they'd have to bring their margins down significantly, which wouldn't be good for their shareholders.
On the data center piece, there have been some concerns flagged that we're overbuilding on data centers, maybe data centers focused on the training versus inference. Jensen Huang was here a few weeks ago touting the need for Europe to spend heavily on infrastructure. I was speaking to the CEO of SAP, and he was telling me that he doesn't think that is what is needed in Europe, that there isn't that demand, because we don't have the training, the foundation models, the LLMs that the US does. Who's right in this debate around data center build?
If you were waiting for training your own model, that could be true. I do think Mistral and some other companies are pretty good at this, and there are other companies here in Europe as well. However, most of the great foundation models are being given away for free. For example, there's been MetaLlama, there are the Chinese models. There's a ton of models that are available for free that are near cutting edge. I don't know why anyone would wait.
And you've raised a lot of capital. You've raised a lot of capital from BlackRock. How quickly are you able to deploy that capital to boost production in a time when you say there's very strong demand? What does that production capacity and that capacity look like for you over 12 to 24 months?
Yeah, one of our unique advantages, if you are buying GPUs, I think it was Jensen himself who said on stage that if you want GPUs in 2 years, you need to cut a PO today. For us, it's about 6 months. And part of the reason is we skip a lot of the exotic components in the supply chain needed for GPUs. There's this thing called HBM memory, called CoWoS interposers. We don't use any of that complicated stuff. So we can literally start rolling product off the assembly line 6 months from an order.
How many language processing units, or LPUs, which are the chips that you specialize in, do you expect to be shipping by the end of this year?
So we've already put into production about 77,000. We'll probably be at 200,000 or more by the end of the year. And then next year we expect to ramp significantly.
And do you stay kind of laser focused on inference, or do you look at some point to expand into chips on the training part of this?
They're very different markets. It would be the difference between being a teaching hospital and a practicing hospital, right? We're very focused on inference because the software stack is completely different. The developers who use it are completely different audiences. It's probably about as different as broadcast versus creating soap operas.
Okay, so it sounds like you're focused on inference.
Yeah.
For now. In terms of operating in Europe, how does it compare to operating in the US when it comes to build out? Are you facing regulatory hurdles, more red tape than you might be in the US or the Middle East?
There's definitely more. However, in our build out, we haven't experienced too many problems. Part of the reason is we're not building the models ourselves. I think that's where some of the trickiness comes in. We're building infrastructure. We rent data centers from existing providers like Equinix. We fill them up with our compute. We load other people's models onto them. I think we happen to have it easier. I would say that other companies have complained, but we are not hitting those issues.
You're here in the UK right now.
I'm here right now.
Where does the UK fit in your kind of regional list of priorities? Do you build a data center in the UK? What next after Helsinki when it comes to Europe?
We've identified space in the UK that's interesting to us, and so we'll pull the trigger when we're ready for it. But the UK is an important market for us as well, and including in Europe.
And that could be a this year story?
I don't know, but if you keep asking, maybe.
Okay, if I keep asking. Okay, so possibly this year. You've identified a space. You've got the backing from the UK government. They're supportive of this?
Yeah, we've had a couple meetings at Whitehall, and they're very interested.
Okay, Jonathan Ross, thank you very much indeed. On the data centre that is being built right now in Helsinki, potentially the prospects of one here in the UK as well. Jonathan Ross, the CEO of Groq, focused on the inference space in terms of chip development there, latency, efficiency and speed in focus. Now, the feud between Donald Trump and Elon Musk has intensified, with the US president criticising the Tesla CEO's plans to start a new political party. Musk announced on Saturday that he was forming the so-called America Party a day after Donald Trump signed the tax and spending bill that he had denounced, of course. The US president signalling that he is not taking the announcement seriously.
It's always been a two-party system. And I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
Well, Musk's return to politics could put Tesla shares under renewed pressure. Let's get more from our Asia transport reporter, Danny Lee. Danny, as far as Musk's latest intervention goes, how's that being received by traders? He's wading back into politics and seemingly kind of poking the bear again.
Yeah, clearly there is no love lost between two of the most powerful people in the world. And just getting an idea of the sentiment amongst investors. In after-hours trading, Tesla shares were down 6.1% on an alternative trading system, which gauges the trades in Asia of Tesla shares. So that's quite a steep indication of the fall potentially as we go into the European Open and into the US Open later on. So clearly investors are greatly concerned or increasingly concerned that the business of Tesla, of SpaceX, could be further implicated with this further push into politics. And given how much exposure there is for the likes of Tesla and SpaceX, and in the billions at risk already, particularly as we have already seen Tesla will lose out on EV subsidies worth billions. And so this is the kind of thing that investors don't want to see, and yet they're going to be confronted with further pressure, particularly for Tesla going forward.
And you highlight one of the potential challenges then to the business of Tesla in light of the politics around all of this. How is the lingering risk then, Danny, to Elon Musk's businesses evolving? What are analysts, what is Wall Street saying at this point about the key risks as a result of this breakdown in this relationship?
Well, we already know that from the likes of JP Morgan, who runs some of the numbers, that the loss of the EV subsidies would wipe off $1.2 billion off Tesla's full-year profit. And then you see the likes of SpaceX since like 2003 have taken in $22 billion worth of contracts from the US government. So they've taken on a lot, and so therefore how does the government, how does someone like Elon Musk weigh up this potentially more fractious relationship? Clearly that is the risk on the minds of investors, and so therefore when analysts look at what Elon Musk is pursuing, some are actually saying that this is the last thing that, of course, analysts want to see or investors want to see, given the kind of challenges that Tesla has around sales, the push to develop more AI and autonomy into the products. But then again, at the same time, some analysts are also thinking, well, this actually could be a good thing for Musk to have a bit of a hedge with having his own kind of political control, especially when he is facing more pressure from someone like Donald Trump.
And Danny, just briefly remind us of the sales pressure on Tesla. What are the latest numbers telling us, and which regions are still looking most challenging? And where does China fit into the Tesla story right now?
Well, clearly the biggest challenge is in Europe. There is that weakness also in China as well, and so therefore by Musk taking control of sales, which if he wants to pursue politics, he does have a lot of it on his plate because he has taken on control of Tesla's sales in Europe and in North America. So I think for analysts and for investors, they would want to be gauging to what extent Musk is devoting his time on politics once again, which he promised to step back from to revive Tesla, versus what he's actually going to be doing for the business and what we actually see in just share price and in future sales, just to see Tesla get back on a more even footing.
OK, Bloomberg's Danny Lee, thank you very much indeed on this new political party being formed by Elon Musk and what it could mean for Tesla in terms of the political blowback, potentially, of course. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So the dollar is a little softer in the gaining in the session, I should say, a little stronger in the session. I'm thinking of softness and I'm thinking of the pound, because euro pound is a story that we're charting here in terms of strength of the single currency versus sterling. Part of it, of course, is the politics of the UK and what happened last week, Rachel Reeves and the Chancellor, the concerns about the fiscal hole that's now opened up that has to be closed by the government, but also that the Bank of England, and this has been drawn out by our MLive strategist, Ven Ram, that Bank of England is still set for further easing. That's at the ECB, and many ECB officials suggest that they may be done, possibly done right now. And those are the factors then that Ven Ram of MLive suggests is going to propel further euro strength versus the pound. Just something worth bearing in mind as you gear up for your summer holidays. It could become a little bit more expensive for the Brits out there if you're travelling to the continent on some of those factors. Let's flip the board and have a look at the trade story then. The French are coming out and saying a baseline 10% tariff, if that is the resolution, is still not a place where they're comfortable being. And in terms of the sectoral tariffs, we know that this is a key concern, not just to the EU, but also Japan and South Korea as well, in terms of how that breaks down on autos and pharma. And for the Europeans, this is the trade surplus then across those major sectors. And this is, of course, what irks President Trump as well. When it comes to medicine and pharmaceuticals, just a massive surplus that's coming through for Europe in terms of shipments to the US, followed by cars and auto, of course. And then you have steel and iron ore. The tariffs are already there on that sector. And then alcoholic beverages. But top of the list really is pharma and medical products in terms of the sector breakdown. So something to bear in mind in terms of the context as we lead up to July the 9th. Let's flip the board and have a look at oil prices then. A little softer in the session, of course, given the unexpected increase. We knew they were going to increase the output, but not quite by as much as they did. Close to 550,000 barrels per day will be coming onto the market additional come August. And so you've seen that softening of the oil price after the spike in geopolitics. The opening trade is up next. Stay with us. This is Bloomberg.